Goldman Sachs recently said it's the best time in a generation to get yourself into the stock market. Well, our next guest says something similar, but not the stock market, the residential real estate market. He is none other than Marc Faber, the editor and author of the Gloom, Boom, and Doom report and a economist of global repute. Marc, thanks for coming on Breakout again. It's always great to have you. Why the residential real estate market now?
Well, basically, I'm not saying that this is a lifetime buying opportunity, but I think investors should gradually start to think what investments will go down the least when the final crisis occurs and there is massive wealth destruction. I happen to believe that, say, home prices in the south of the United States, in Phoenix, in other words, in Arizona, in Georgia, Nevada, and so forth, are relatively, I'm saying relatively inexpensive compared to other asset prices.
So this is interesting because I know you have written a lot and talked a lot about this whole massive wealth destruction. So this is not an offensive move as much as it is a defensive move.
I think we have to be aware that one day there'll be a reset. And in my view, and the difficulty is to know when it will happen and from what level on the Dow Jones. It could happen from, say, Dow Jones 20,000 or 100,000 or 100 million or 100 trillion, because Mr. Bernanke has basically proven himself to be another Rob Mugabe that will print money when asset prices go down, and so we don't know when it will happen. But I think one day asset prices will collapse in a deflationary credit collapse. It could happen in 5 or 10 years' time. And in that scenario, the investor has to ask himself what asset prices will be relatively secure. I happen to real estate, because of its wide ownership, will be relatively safe compared to financial assets that are extremely volatile.
There's certainly a lot of interest in the real estate market in the U.S. economy, around the world. But, you know, the housing stocks have had an unbelievable rally this year, and people are thinking about getting into that. At the same time, the housing data, at best, people could say, is bouncing along the bottom and not getting any worse. So those two don't really add up in my estimation.
I didn't ask you to buy home building stocks. That I wrote to buy last November, and since then they doubled, and now they're in a correction phase, and I think they'll move lower. But all I'm saying is that compared to other asset prices, real estate prices, residential prices in the parts of the United States are relatively inexpensive. Everything is mispriced, because when you have zero interest rates, you have a complete mispricing of all assets.